Sales dropped, prices softened, homes are sitting on the market longer. If you've been watching the Edmonton market this summer, July might be the month where things quietly shifted. Today, we're breaking down the July 2026 numbers from the Realtors Association of Edmonton. And according to their own board chair, this could be the turning point for the rest of the year. Let's get into it. Hey everyone, welcome back. Every month, I break down the latest residential stats from the Realtors Association of Edmonton, so you don't have to dig through spreadsheets to understand what's actually happening in this market. Today, July 2026, sales, prices, inventory, days on market, and what the board chair called a significant shift. If you're buying, selling, or just watching from the sidelines, this one matters. Quick favor, hit subscribe and the bell so you catch next month's numbers the moment they drop. Let's dig in. Let's start with sales because this is where the shift is most obvious. July saw 2,535 sales across the Greater Edmonton Area. That's down 7.6% from June and down 11% from July of last year. This isn't a one-month blip against a strong month either. June was already a high point for the year, so a drop like this stands out. New listings held fairly steady at 4,258, down just 1% from June and basically flat year over year, up 0.6%. So sellers kept showing up roughly at the same pace. Buyers just slowed down. And when demand cools while supply holds steady, you know exactly where this is headed. Inventory. Let's talk about it. Active inventory now sits at 8,142 homes, up slightly from June and 17.9% higher than July of last year. That's now nearly 3 months in a row of double-digit year-over-year inventory growth. Months of inventory ticked up to 3.2 meaning it would take just over 3 months to sell everything currently listed if nothing new came to market. And that number has been climbing steadily all year. We're not in buyer's market territory yet, but this is the most balanced this market has felt in a while. Now, the number everyone's watching, price. The average selling price across all residential types was $475,079 in July, and ours down 1.8% from June, though still 2.6% higher than July 2025. That's the second straight month of month-over-month declines, following June's pullback from the spring peak. And here's the number that really tells the story. The MLS Home Price Index benchmark, which smooths out luxury sale swings, sat at $429,100. That's down slightly from June and essentially flat compared to July of last year. 0% change. When your benchmark price shows no year-over-year growth at all, that's about as clear a signal as this data gives you. Price momentum has stalled. The association's own board chair, Darlene Reed, didn't mince words about this one. She said, a significant shift in numbers occurred in July. Decreased sales, despite ample inventory, softening prices, and longer days on market are strong indicators that demand is subsiding. She also said numbers may rebound slightly through fall, but activity likely won't reach the same volume again for the rest of the year. That's about as direct as these quarterly statements get. Let's look at how this breaks down by property type, because as always, it's not uniform across the board. Detached homes average $585,726, down 1.3% from June, still up slightly year over year, but sales fell nearly 8% from June and over 8% from last July. New listings also dropped almost 5% month over month. Less activity on both sides of this segment. Semi-detached prices dropped to $425,329, down 2.1% from June and down slightly from last year too. Sales fell 8.2% from June. New listings, though, are still up 12.5% year over year. Sellers haven't slowed down here even as buyers have. Row and townhouses took the biggest price hit of the month, down 3.5% to $292,756. And sales dropped 9.8% from June, 16.5% from last year. This was the softest segment in July, full stop. Apartment condos also cooled, prices down 2.1% to $214,521, though still up over 2% from a year ago. Sales fell almost 4% from June and were down over 21% compared to last July, the steepest year-over-year sales drop of any segment. So across the board, prices softening, sales slowing, and it's hitting every property type just at different speeds. Last signal, days on market. The average home took 39 days to sell in July compared to 33 a year ago. Detached sat at 35 days, semi-detached 39, row/townhouse 40, and condos were the slowest again at 55 days. Every single category is taking longer to sell than it did last July. That's the clearest confirmation yet that buyers have the upper hand on timing. So here's July in one sentence: slower sales, softer prices, rising inventory, and a market that's shifted meaningfully toward buyers heading into fall. If you're a buyer, this might be the best window you've had all year. More inventory, more negotiating leverage, and sellers who are more motivated than they were in spring. If you're a seller, pricing accurately matters more than ever right now. The market isn't collapsing. Prices are still up year over year in most segments, but overpricing in this environment means sitting longer, and the data shows homes are already sitting longer than they were 12 months ago. That's your July 2026 Edmonton market update. Drop a comment below. Are you feeling this shift where you are? Sellers, has your home been sitting longer than expected? Buyers, are you finally seeing some room to negotiate? If this helped, do me a favor, smash that like button. It helps this reach more people in Edmonton looking for real answers, not just headlines. Subscribe and hit the bell so you don't miss August numbers. And if you're thinking seriously about buying or selling before the fall market, the link in the description will connect you with a local realtor who can walk you through what these numbers actually mean for your specific street and situation. Full stats and the official release from the Realtors Association of Edmonton are linked below. Thanks for watching. See you next month. Take care.